Yes, we are here. Good night again, everyone. This is Stephen Morgan, your currency trader. Today we are going to be looking on some currency pairs and how that affect the currency market.
References from home interface. Systems are now fully operational.
Good night, everyone. We are here. We are just looking at the virus and how uncertainty affect the FX market. Right? And how this affect the FX market. So I'm just going to get a run through. We're going to look at Australian dollar, US, Swiss Australian dollar, and we're going to look at the safe haven currencies like the Japanese yen, the Swiss franc, looking at, and USD currency. Right. So, as a currency trader, right, whether whether there is risk on or risk off in the market, we capitalize on the move. It's sad to say regarding the circumstances of of what's going on, but we are just doing our job as a currency trader using volatility to capitalize on each move. So on the chart, I have USD, Swiss franc, dollar yen, dollar chief, I have oil, and we have gold. Right? We have gold. And the gold is basically sinking relative to the the US dollar strength, I think. The strength. Right? So we are just going to look at USD cross pairs. Right? We are just going to look at the USD cross pairs. And we are going to look at euro dollar first thing. Well, we had the up move. The market was basically trending up, right? So after the market is finished, the only say finish, the uptrend, it suddenly reverse, right? Reverse. It had a huge spike down, but it pulled back up into our resistance, or we could say the support area, right? We could say the support area right there, right? But typically speaking, the USD normally gets strong in a risk off scenario, right? And we all know we're talking about when we talk about strength, we are safe events, we are talking about the chief, CHF, and we're talking about yen, right? And USD, US dollar. Right. So doing the risk of these currency gains strength, which it gets strong, right? And the commodity currencies like the Aussie and the Kiwi, you know, oftentimes CAD, reason being the CAD, because the oil tend to go on a downtrend, right? Have too much supply, so and we know oil correlate with CAD, right? So when we analyze the market and we understand what's going on, we then just turn to our charts for technical setup and just execute our position, right? So for example, now I'll drill down into a lower time frame on the euro dollar right here. Let's see a 50-minute. Let's see a 50-minute, and we can go as far as change the time frame, right? But I'm going on to a 50-minute. So if it's a bear on the asset, right, you got the breakdown, so you're waiting on the pullback, right, to execute the position, right? So execute, breakdown, don't sell low, right? Wait on the pullback, execute our execute our position. It went a bit sideways here, but as we can see, it continued down, right? Now it rally up. Probably this could be some profit taking, right? This could be some profit taking, but as we can see, it's making a bull flag. We don't know how far this bull flag might take us. It might take us back into resistance right here. It might just take us back into resistance right there to just maybe continue with the sell off right there, get back higher, and then continue with the move down, right? So this is the template that I'm using is a daily confluence with the monthly and the weekly pivot points, right? But I'm gonna change this to the daily pivot point, right? Gonna change this to the daily pivot points. That's it. Right. So for those who don't know the pivot points that I use, right? I'm going to identify my sell zones. I'm going to each day the sell zone for each day. So right now all of this is tomorrow sell zone. It basically wide. It's a wide area because we have the huge volatility today, right? But if there was a bear on this asset, you have the price went in your sell zone and basically you just execute the position, right? So you had many opportunities to execute a position, right? So you sell here each day, every day. Sell here, you sell here, and you sell here, right? That's if you're a bear. Right? So if you're a bear, this would be your perfect setup to execute the position, right? Because we understand that the moving average, the 55 and the 21 is in control, right? So price is below the moving average. So we're in a downtrend, right? And we have the 55 and the 21 moving average. So last week, 2 weeks before, you're a bull, you had your chance to participate in the market being a bull, right? And I'm just going to identify the buy zones, right? I'm just going to identify the buy zones. S1 central pivot point, right? I don't have it right there, right? So what I'm basically saying now is this: market will get a trade right in the edge there. If it was aggressive, you could take this. So have a trade here, have a trade here. Didn't get any that day, we get one this day, right? And this is always stay consistent. No trade, no setup. The market don't enter in your kill zone. No trade, right? But if you are using pivot points along with price action, you can also target some areas like support. Here was support, right? We just drag anytime the market make a new high, we just drag this across. Here is support. It's a small one there, but we would even count this. It's not quite there, and the market have a little roadblock right up here, right? So this is the way we execute our position using pivot points, right? So bulls at their run, and bears at their run also. So just pick a side, pick a side, pick a team, and just wait on the opportunity to arise and then execute your position, right? That's basically it. I would like to have a look on oil, right? And we are in a oil war, right? We are in a oil war where the Saudis, Saudi Arabia, or the Saudis, whatever you want to call them, Saudi Arabia against the Russian and I would say the US also, right? I would say the US also. Because what really happened is that this is a bit crowded. What really happened is that just going to do the white chart for now. Wow. So many traders get in the sense that the gap, when a market gap, it tends to fill, right? So many traders was trying to fill this gap and they get swiped. But the thing about with gap, you see when there's a fundamental change where gap is concerned, it's highly unlikely it going to fill, it will fill at the following trading day or things like that. What will really happen with oil now and the Saudi Arabia is that, let's say they are increasing supply, right? They are increasing supply. That is what really happening, right? They are just increasing supply, right? This is the demand curve and this is the supply, right? Cool. So let's say the equilibrium is here, right? The equilibrium is here, right? Let's say the equilibrium is there. They have a lot of oil in reserves, so basically they are just flooding the market with oil, right? They are just flooding the market with oil. And the tactics behind that is that, let's say America now, right? Or say the other oil countries we are mining, digging for oil, right? In the US, it's about to keep an oil company alive, oil rig alive. It's like say $45 per barrel. You need oil to be at about $45 per barrel, right? Per barrel to keep the companies, the oil well running, right? To keep the oil mining running. Now, oil is 30, 20, it's a 30. Now oil is $30 per barrel, right? What is going to happen to these companies, oil companies that trying to stay alive, right? These oil companies need the oil to be at $45 right here to keep their business running and keep everything afloat. And now the oil, the excess quantity, alright, this is demand. I'm gonna put this to supply. So increase supply. Increase supply. Increase supply. Right? So it is right here now. So supply, too much supply in the market, no demand. So all of these business now is just gonna maybe have to close. Sad thing, maybe have to close out because it's not worth it. To it need $45 per barrel to keep the business running, and when you have your business running and the oil is at $30 per barrel, you're operating this business as a negative. So it'll be like minus $15 per barrel. So let's say your company or your oil rig is operating at a loss. So it's not profitable in no way to keep this rig running. So that is a long story short, right? Where the oil is concerned and what the Saudi has planned to do. Anyway, the Saudi have lots of money, so they can keep the oil low, dumping and supply, and keep the oil low for a couple of years, maybe 2-3 years, you know, just to try get out these frackers in the market, right? Definitely, let's try get out these frackers in the market. So that's what basically really is happening right now, right? So based on the uncertainty and global shutdown, I wouldn't be surprised if the oil fell further. No joke about it. If it break this low, should go up on a monthly time frame and see how far them go. Wow. If it can go back even further too, I wouldn't be surprised if the market come down to like, I wouldn't be surprised. Or if them can just keep it at this level for a while, right? Let it consolidate like this. We're I'm just gonna change the color right here. Right? Probably them just try to keep the oil around this in this area right here. Right? Keep the oil around this area right here. Definitely. Right? And this is also a good opportunity to buy oil for longer term. Right? For longer term. Because after all is said and done, right? From all this, when them get them act together and decide who gonna take control and uncertainty out of the market and the demand for oil pick back up, you can say you buy oil at this price, right? 23, 25, 28, 29, and you can only thing expect for oil for just continue up in the next couple of years, right? Basically what I'm saying, for the next couple of years. It's even to this era right there, minimum, right? So this is an opportunity where you could have buy oil and hold it for a longer term, weeks, months. Yeah, if you do your research and you feel confident that the oil going to go up in longer term, I don't know, right? So this is just I want to point out where to you guys about opportunities where you can get involved in the market. And this is the beautiful with Forex. There's always an opportunity. When oil war sell, we sell the oil. When things get back, we buy back the oil. So it's like a up and down, right? Up and down. There's always an opportunity to profit from the market, right? There's always an opportunity to profit from the market. Definitely. Right? The euro is not doing very well, right? At the moment, you understand that. Index is still down, same way solid as a rock. Yen. And this, in my humble opinion, this have further, it hasn't reached the bottom yet, in my humble opinion. Right? So, as a currency trader, our job is to just capitalize on these moves, basically. Right? So, with that being said, you then can develop a bias on a currency, right? You can develop a bias on a currency. It's a bit messy. You guys might not be able to see what's going on, but we see we had it right here. Landslide, right? Landslide, right? And in my humble opinion, this hasn't reached the bottom yet. I could be wrong, right? But we are basically in a consolidation here right now, just moving sideways. Maybe it could be a little profit taking, or the monetary central banks and the people with the monetary policy trying to get the market stable, right? Stable. That's the whole idea, right? So possible here might be a good sell zone again. Probably here might be a next sell zone. You know? Yeah, some little things like that. Alright? So I'm gonna cut it short because basically the virus have everybody out and about buying all these hand sanitizer, the mask and things like that. So that is what really happened. But as I said, as a currency trader, as a trader overall, whatever the market does, you guys just need to capitalize on it. It's sad to say that some people might have to stay home and lose job, or cut the hours, or work from home, or whatever, some things like that. It's sad. But on the other end of it, we are here trading and making some great profits. Alright? So until then, I'll continue this journey. So please like, share, subscribe. Also would appreciate a comment, right? And please click the notification bell, so whenever I have any session or post any videos, it just give you guys a notification, right? And this is just my day trading setup that I have here. I have the 4-hour time frame with the weekly and the monthly pivot, right? And this is where I do my execution, when I execute my trade. So I like to use multi-time frame analysis when I'm doing my trades. I don't like to use just one time frame. I like to see the bigger picture, the daily, the 4-hour, H4 and the H1, right? And I execute on a 15-minute, even sometimes a 5-minute, so I could get the beginning of the move, right? Help me to time the move so I can execute my position accurately, right? So I'm going to cut it right here. So please like, share again, right? Until next week. Peace.